Hello and welcome to KBRA Clips. I'm Kate Kennedy and I head our media relations efforts, and I'm joined today by Marjan Riggi, head of our corporate aviation team. Welcome, Marjan.
Thank you.
So last week was the annual conferences in Dublin, both Airline Economics and Airfinance Journal, and I know you were over there, so just curious if you could give us some feedback on the conference, any trends for 2018, and really just a big overview of the conference would be great.
I would say that the overall tone was positive. Leasing companies are doing well, really well. Demand for aircraft is pretty strong. Oil prices are still pretty low, although they're going up slightly. And even though we had a few bankruptcies last year, I think that overall the impact on the lessors globally was pretty minimal because most of the aircraft was placed pretty successfully, even though the lease rates, I'm sure, are dampened versus the original contracts, but we don't really expect to see major problems for lessors in aggregate. Airlines always have problems. There are always bankruptcies. It's a much more cyclical sector than leasing companies, than it is for leasing companies. But the one nice thing about this year was that a lot of the regional economic issues have been somewhat resolved. So you may not have as many pockets of problems, but airline bankruptcies are almost a given every year, and you will see some of them perhaps in 2018 too. But I think that the overall message is that because passenger demand for passenger travel is so high that it all trickles down to demand for aircraft and traveling, and it's good for the entire industry.
Okay. So speaking of performance, obviously H&A has been in the news as of the last few weeks, and obviously we have our public rating on Avalon, so just curious how H&A is impacting our rating.
So, we have a rating on Avalon that we assigned in September. The rating, their senior unsecured rating is BBB. Their issuer rating is BBB+, but the relevant rating is really BBB. We assigned that rating because Avalon has very strong credit metrics, really low leverage, importantly, very good liquidity, strong management team, and they also have a very strong franchise, especially after they bought CIT. Now they're the third largest lessor in the world. When we rated them, we knew that they're going to be ultimately owned by H&A. I mean, they are ultimately owned by H&A, although their direct owner is Bohai Leasing. And Bohai is somewhat more transparent because they're listed on the Shenzhen exchange in China. But H&A definitely has a lack of transparency. So I think that from a ratings perspective now, we're monitoring the situation really well, pretty closely, but I think the key there is that as a rating agency, because we rate the bonds, we do have a stable outlook on them, and the reason for that being is that even though we recognize that the bond spreads have been widened because of the noise around H&A, that because Avalon doesn't have any liquidity needs going forward in the next 2 years at least. Their next bond is due in 2020, and that's only a 500 tranche of their term loan B that's coming due. And the next one after that is 2022. So for the moment, they don't have to go to market and raise debt in the senior unsecured or secured market. So it's not even, so they don't have to go to market to pay higher prices. 2 years is some time, and we are monitoring the situation. We think there is a lot of noise around H&A, and I don't think it's going to go away anytime soon. But I think that from our perspective, we're looking at the credit of Avalon on a standalone basis, and the fact that they can, pay their debt in 2022 at this based on what we see now, and they don't have immediate need for financing. They have actually $5 billion liquidity available right now. The other thing to say about Avalon is that they are although trying to mitigate some of these issues, and they're trying to see what they've told all rating agencies that they're trying to see whether they could add bond covenants into their bond issuance. so that it's a little bit more clear to the market how much dividend they would need to pay if they wanted to pay it. I think that will dampen some of the concern, because people don't think that there is like that they can just pay up, inordinate amounts of money to Bohai, which could be upstream to HNA, I suppose, even though Bohai is only owned 52% by HNA. So we think that's positive if they're able to do that. And we're talking to them all the time, and they're public about all these developments, and we'll see. But for the moment, our rating is BBB with a stable outlook.
Great. Okay. So in addition to Avalon in September, we also just recently put a rating out on Intrepid, correct? So maybe you could just give some insights on that.
Yeah, so we actually did 2 ratings. We did ACG. We went public with the rating of ACG, which was really interesting for us too. And more recently, we rated Intrepid, which was in a way a milestone for us, because it was the first high-yield rating we assigned publicly. We have other high-yield ratings, but they're unpublished. That's also a name we've been following for years, just like we were with Avalon. They just decided to go to public with it in actually early 2018. The rating is B+ at senior unsecured. And the reason it's low is because this is a very specialized aircraft leasing company. They have high concentration, but they also have a very strong management team. They've gone through several restructurings. They've gone through several issues in the past few years, and we've actually been able to give them credit for having been able to get out of it in one piece, let's say. And they've had equity injections from their sponsors. They've restructured their shareholdership. So if you read our rating reports, you can get more color on it. But it is quite an interesting rating for us, because it shows the spectrum of ratings that we cover. Because now we go from B+ to, actually from B, because we have another name unpublished at B, to single A, which has a parental support incorporated in it.
Wow, okay. So how many total ratings then?
We have 10 ratings for leasing companies.
Okay, that's great. So I know leading up to the conference, you put out a lot of great research. One, the outlook, and then another piece on aircraft lessors. And so just maybe a quick update on that piece.
The piece really basically, it's a summary of what I just said, is that, we think the outlook is pretty stable for the market. We see positive trajectory for the leasing companies. Because we think that the utility of using leases versus owning aircraft is still pretty good for airlines, especially as oil prices have ticked up a little. It may not be that the percentage of leasing as a total aircraft fleet out there is not going to be much more than 40%, which is what it is now. But in terms of volume, it's still going to grow because the whole pie is bigger. Oil prices have ticked up a bit, but I mean, maybe not a bit, like they're in the $65 range, if I'm not mistaken, today. But that's, it's still much lower than the numbers that we had seen before. I think that the whole industry, though, is backed up by really, really strong demand for travel that's coming from the emerging economies. And that's really what the fundamentals that pushes it up.
Okay, great. All right, well, thank you for joining today. And thank you for joining KBRA Clips. All of Marjan's research is found on our website, kbra.com, and everything is free of charge. Thank you for joining.